One of the key indicators that supports this opinion of these so-called experts in regards to this foreclosure bubble and this wave of foreclosure, those are the key words. Those are the buzzwords that people are using to really capture your attention. And if you watch videos on YouTube, you'll see people with like a static image of them like pulling their hair out as they have in bold red letters, tidal wave of foreclosures, real estate market crash 2021. And it's because there's a record number of mortgage forbearances that we've experienced over the course of the past, year, close to 12 months. And for those of you that don't know, forbearance is just simply an arrangement with mortgage holders to delay homeowners' payments for several months, up to a year, with the balance being due at the end of the forbearance, whether it's a few months, 6 months, a year, so on and so forth. And so we saw basically 4.3 million homeowners in forbearance in May of last year, whereas now that number is harboring around 2.7-ish million. So the question is this: when forbearance ends, when forbearance ends, which is inevitable, I mean, it's going to happen, it can't last forever, what's going to happen? Will this cause this quote-unquote tidal wave of foreclosures that will drive prices down? Will this be the pin that kind of bursts the housing bubble, driving prices down and putting a hard stop on demand? That's kind of the feel that I'm getting from some folks that I'm talking to that follow the market but have concerns, and maybe they have a generalized understanding of the market, or maybe they're just reading things online and blogs or watching videos, and they're just concerned. And so that's really what this show is going to do. We're going to address those concerns through data, through trends, through a deep understanding of how all of this plays together. So let's first just kind of take a step back and look at what happened month by month since COVID was declared a national emergency back in March of last year. And by sharing this data, you'll start to see the trends, which I'm going to explain along the way to you. But again, if you want to know how this impacts you, your decision-making process, whether you should be considering buying, selling, or investing in real estate right now, these national trends and this data, to an extent, impacts you, but all decisions in real estate are local and personal. So if that's something you'd like to just have a discussion about, feel free to call me, text me. My cell phone number is 843-400-8009, 400-8009. Send me an email, brian@brianbeattyteam.com, or go to listingsincharleston.com, which is our website. So let's go through this in kind of chronological order. So in March, on the 13th, Trump declares a national emergency. People kind of companies begin the process of, thinning the herd, so to speak, by instituting layoffs and furloughs. We all know somebody that's gone through that at some point here in the course of the past, 9 months or so, 10 months, 11 months. On the 23rd of March, the Fed Chairman Powell announced that the central bank would be making unlimited mortgage-backed securities purchases. As a result, interest rates right around that point in time were about 3.45%. That was the average for a 30-year fixed mortgage. So then we go to April. The overall share of mortgage loans in forbearance rose by about 7.5% in the last week of April, with bank-based servicers really holding kind of the biggest slice of the pie. 30 million Americans filed for unemployment insurance since mid-March. So in close to 6 weeks, we've had 30 million Americans file for unemployment insurance. Interest rates go down from 3.45% to 3.23%. At that point in time, it was an all-time low. Then we go to May. By the end of May, total loans in forbearance reached 8.53%, about 4.3 million homeowners in some form of forbearance. But as mortgage rates continue to drop, so did inventory, which we didn't really expect. We kind of expected inventory to go up. What happened was the exact opposite of that. Inventory started plummeting. And so that's when realtors start reporting a huge uptick in sales activity. There's all this demand since, interest rates are low, which takes us into June, and this beefed up kind of unemployment benefits did keep forbearance rates lower that a lot of people had forecasted. But instead of 20-30% of people in forbearance, the actual forbearance rate was 8.6%. of all mortgages. So we're around 4.2 million at this point in time. In May, or I guess in June, sales jumped 21% compared to May. So we're starting to see transactions occur. We're starting to see inventory get absorbed. By July, COVID cases are starting to rise at, alarming rates. And then to add to the, stress of consumers, July 30th was the end date for that $600 a week federal enhancement to state unemployment benefits, which obviously was aimed at replacing salaries of people who had lost jobs, amid the pandemic. But by July 26th, the total number of loans in forbearance was down to 7.67%, about 3.8 million people. Then we go to August. In August, TransUnion reveals a report that says that while 53% of respondents reported making normal payments to their mortgage loans, about 14% of them said they weren't sure if they could pay next month's bill. So we're starting to see this financial hardship start to set in. By the end of the month, the total number of loans in forbearance fell to 7.16%. So now we're down to 3.6 million. Mortgage rates are now at 2.93% at the end of the month, breaking yet another record. Home sale activity is way above expectations amid continually shrinking inventory. So then in September, the number of mortgages in active forbearance rose actually by 21,000 in the last week of September. And according to a report by Black Knight, which is a very popular and kind of the premier provider of data for and analytics for mortgages and home equity lending and servicing, stated that nearly 7% of all mortgages are now in some form of active forbearance. And now we're down to 3.6 million people, which, by the way, represented over $750 billion in unpaid principal. But now we see interest rates go to 2.88%, which continues to kind of fuel the fire on the demand side of things as inventory continues to reduce, which does what? It starts pushing up prices even more. Then in October, HUD, or the Department of Housing and Urban Development, announced that the FHA was going to extend the date for consumers to ask for mortgage forbearance to the end of the year, December 31st. On the 25th of October, 2.9 million homeowners were in forbearance, which was 5.83%. Mortgage rates ticked up a little bit, 3.01% was the average at the end of the month in October. So then we go to November. By the 22nd of November, we have 2.8 million homeowners in forbearance, which is down from, again, the peak of 5.54% of all mortgages. Interest rates are now at 2.72%, and new and existing home sales, although they started to cool off in October, were still 20% higher than they were in November of 2019. We still see shrinking inventory. Then in December, we head into the last week of the year. Black Knight again estimates that 2.8 million homeowners are now in some form of forbearance, which is 5.3%, and accounts for $565 billion in unpaid principal. Mortgage rates dropped to 2.66%. Also in December, the FHFA extended its foreclosure moratorium for borrowers with mortgage backed by Fannie Mae and Freddie Mac, just for a month, though, until the end of January of 2021. But 10 days ahead of its latest expiration date, HUD extended the deadline for forbearance until February 28th of this year. Then we get a second stimulus bill, give $600 to folks making less than $75,000 a year. And so that's the timeline of events. So I'm going to tie all that in to where we are right now and discuss the impact of that. You guys are you're seeing the trend. You're seeing the reduction in interest rates. You're seeing the reduction in forbearance, the reduction in unpaid principal. And so we're going to tie that all together when we come back. Stick around. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. And remember, if you want to reach out to me, you want to have a discussion about your plans to buy, sell, or invest in real estate this year, my number is 843-400-8009. That's 400-8009. Or check us out online, listingsincharleston.com. Stick around. We'll be right back.
Visit Brian Beatty's website at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on The Big Talker, 1250 WTMA.